Hey, good afternoon, everybody. Just a quick look at this December crude oil chart. Really, for the month of October, we spent our whole month in a sideways trading range, $5 range with lows just below $80 a barrel and highs just above $85 a barrel. And if you look in September, it was really the same type of trade. We had a $5 range in September. The highs were just under 80 and the lows were just under 75. So very similar type trade as far as being choppy and sideways. And I don't think that's a market, at least the way it's trading right now, that's going to garner heavy investment activity like we're seeing in a lot of these other trending markets. But we're going to be on the lookout for some developments over the course of the next week that could change that. And you know, what could start a trend here? We're going to be looking at a trend change in the dollar index, or a possible continuation of the downtrend that we've been in, and also for a new trend or a continuation of the trend in the equity trade. And it could help cause this crude oil market to break out. Now, as far as this high that we put in back in May. So even though we broke out of a short-term wedge, we did see some buyings on the breakout above this trend line, but held this downtrend here. And we're still, in the big picture, in a wedge formation. It'll still look like a buy down here just above 80, and big picture still looks like a short-term sale around $84 a barrel. So until we break out of this range, that's where we're at. Now, as far as recent news, we were up sharply in the talk that Saudi Arabia's oil minister made some comments basically stating in a speech in Singapore that consumers were, and this is quoted, looking for oil prices around $70, but hopefully less than 90. And so, you know, what that gives the market is really the idea that the Saudis won't intervene on any kind of a move here to prevent $80 crude oil. And they're probably not going to take any significant action unless we go above $90 a barrel. And who knows, this type of a price target is always a moving target. So by the time we hit 90, they may say $100 is fair based on those economic conditions. But this does open up the door to some further rallies based on this type of commentary. We also had some strong manufacturing data out of China that lifted the market. And even though the dollar did recover from its lows here today, we had some U.S. manufacturing numbers that were positive, showing some growth in the month of October. So really to keep a very close eye on what type of quantitative easing package we get out of the Federal Reserve. The market has varying opinions as far as how much is going to be spent and how much of a timeline it's going to be spread out over. And there's a very good potential for some kind of a buy the rumor, sell the fact type trade once the announcement is made. And we've also got the elections coming up tomorrow that are going to provide some influence on the dollar. Not to mention other central banks around the globe possibly introducing some interest rate changes to their banks as well. So a lot of economic data that we need to keep a very close eye on. But at least in the near term, this is a trader's market, not a position player market. So get your little 5, 10, 15-minute charts out and trade accordingly. And then back to the dollar here. This is the same exact chart we looked at last week. And this was last Monday, and this is what we did since then. So we're right back to where we started from last Monday's meeting. And in the meantime, hit some of these lines that were drawn on the chart. So no new studies have been added to this. You can see how the 20-day moving average has been somewhat instrumental on some of these short-term moves. But again, this is all about some of the new information that we're going to get over the course of the